Earnings season kicking off. We are going to start the Q3 earnings season while speculations about the Fed's next move are getting more widespread. Analysts depend on different factors like employment, inflation, and economic growth have different ideas. Usually, next week after NFP numbers are supposed to be a quarter, but this week would not follow the tradition with US CPI, PPI, and Fed minutes, UK employment data, and the beginning of earnings season. Let's review the most important events of the week ahead with me, Ahura and IFCM markets. Number 1, IMF meeting. This year's annual meeting will take place in Washington, D.C. in the United States from 10 until 16 October. In the annual meeting of the boards of the governors of International Monetary Fund, the World Bank Group, central bankers, ministers of finance and development, parliamentarians, private sector executives, representatives from civil society organizations, and academics will get together to discuss about the current economic situation and issues around the globe, including the world economic outlook, development, and AID effectiveness. Press conferences and many other events focus on the global economy, international developments, and world's financial system can cause short and long-term market fluctuations. Number 2, UK employment report. Average earnings index, climate count, and unemployment rate from the UK will be very important to watch to have a better ideas of healthy level of British economy, especially after recent changes in the country's highest leadership and management. The UK earnings index is expected to increase by 5.9% and the unemployment rate can stay unchanged at 3.6%. On Wednesday's GDP front, after August and September's missing estimates, the October figure is expected to remain flat at 0.2% and below the July high of 0.5%. With expected data, the sterling still will be under pressure. Number 3, US PPI and FOMC minutes. 2 weeks after the Fed meeting, we usually have the minutes, and now we are going to have more detail from the latest meetings of FOMC. Minutes usually provide more information about the U.S. economic and financial outlook, what members discussed, agreed upon, and outlooks. On the other hand, before Thursday's CPI numbers, the producer inflation numbers can tell us what we have to expect about the consumer inflation in the next months, as well as healthy level of production cycle. After publishing minutes, the market could be so volatile, so be careful about your trades. Number 4, U.S. Consumer Price Index. Although we have a long way to tame inflation, CPI is still expected to slow down a bit. However, estimated data are so confusing and mixed. September monthly CPI is expected to rise by 0.2%, which is more than 0.1% in August. But on the annual scale, it must slow down to 8.1% from 8.3% seen in August. On the core data, it must slow down to 0.5% in September from 0.6% seen in August, but the annual core CPI in September is expected to rise by 6.5%, which is more than 6.3% seen in August. These data cannot help the idea of less hawkish policies, which is not in favor of stock markets. And finally, number 5, earnings report. Q3 earnings season is kicking off this week, mostly with financial institutes. PepsiCo will report on Wednesday, Taiwan Semiconductor on Thursday, and Friday will be a very busy day with important earnings reports from United Health Group, JP Morgan, Wells Fargo, Morgan Stanley, and Citigroup. Thanks for watching this video and hope it's going to be an amazing week for all of you.